What's up everybody, Tom here with another video. Sometimes the stock market reaches a critical juncture where two levels become very important for the continuation of a trend or the start of a new trend. Are we at that point right now in the S&P 500? Stay tuned. So as we always like to do on this channel, let's try and take the complicated out of the stock markets and simplify them together. One of the ways we can always do this is by having a look at the heat map of the S&P 500 and understanding what happened on the previous day and what's been happening over the previous weeks and months. Now, we've talked about this a lot on the channel recently in terms of what's been going on in the markets. There's a lot of ups and downs, and mostly it's been downs, of course, in the tech sector. Now, we live streamed last night, and if you're interested in more live streams, remember to subscribe and, of course, hit that alert button. But during that live stream, we saw the markets come in very hot into the start of the day. In fact, at that point, Microsoft was up about 2.2%, Apple was up similarly, Google, Facebook, and Amazon were all up, including Netflix as well. Now, what happened at the end of the day is we saw a sell-off in these stocks, and that's the important part. What's happening in the morning is more of the retail investors, people like you and me. In the afternoon, we have the bigger investors piling into the market. So we know there's a lot of event risk this week, and it's very important that we keep seeing a very similar statistic coming in, which is a sell-off at the end of the day. If we do have that point, we know that there's going to be a lot of fireworks, of course, on the FOMC meeting. So when is the FOMC meeting? It is Wednesday, September the 16th in the US at 2 p.m. it starts to 2:30 p.m. We have the Federal Reserve, Jerome Powell coming out, doing a press conference, and this will be the day of high volatility in the markets. We talked about in our weekend video about how many other bits of news are coming out for other currencies around the world as well. So it's sure to be a fireworks day with high volatility and high implied volatility. So let's talk about some of the key indicators in the markets right now that are showing us whether this is healthy or not healthy in terms of the S&P 500. And I'm relatively optimistic about what happens to the S&P 500 over the next 12 months. So here's the volumes for the S&P 500 over the last couple of days. You'll notice here that we're under 4, and even during the sell-off, we were only barely above 4. Now, if you have a look at these September periods, and then we go back over to when the market was actually crashing back in March and April, we'll notice that the volumes were way higher during that period. Now, it makes sense, of course, the movements were really fierce, but in general, the average volumes across that point were very, very high. Now, if we go back all the way 12 months ago, and we take a look at September of last year, you'll notice that the actual volumes are very similar for that period of time. So it's a strange thing where we are seeing the market move quite large, but at the same point, the volume is not necessarily showing us a huge amount of transactions. We're actually seeing a decrease in transactions in general through the markets. So what else are we seeing in the markets? Well, I think this is always an interesting point. We have a huge amount of difference between growth and value. Now, I don't expect that value stocks will get beaten down very heavily during a sell-off or a correction phase like this. Even if the market continues falling, value stocks probably won't move that much. However, when we look at the difference between growth and value, you'll see there's a massive discrepancy in how well these stocks have done. We all know that, of course, the FANG stocks, the growth stocks, have outperformed everything in the market. But look at the tech bubble over here and look at the discrepancy we had during that time. It's a very interesting stat. Does it mean anything for us as traders? Well, it definitely shows us that since the Fed has been involved in the markets, they've pushed it high. But we need to remember that what happened in the tech bust, there were companies that literally had no earnings. Now we have Apple, Microsoft, Facebook, companies that are quality, that are definitely making a lot of money and will continue to grow. So we expect growth to continue to decline incredibly if we have further corrections, while value will remain very steady in the market and shouldn't move more than a couple of % off its bases right now. Now, I've been talking about this one for a little while, and that's copper. And copper is a very good indicator of the health of the US economy and the health of the global economy. It's a highly demanded material during booms and during periods of regrowth in the economy. We know that copper precursored in January, the market crash, and we also know that they both recovered at the same time. So the technical analysis on copper is very important to whether we're really seeing a corrective phase or we're seeing a proper crash in the market. And I still think copper is showing us very bullish intent on the markets. Now, you'll know that JP Morgan, Goldman Sachs, and a few other big investment banks said, that's it for the dip. It's already happened and we've bought in. That's what they told everybody last week. But of course, it still comes down to the FOMC this week. But copper is looking incredibly bullish at this point, almost making a new high off this 308 resistance. And that's very good for economic recovery in the US, and is very good for long holders in the S&P 500 and the NASDAQ. What else are we seeing through the markets? Well, we're seeing still a gradual decline of the US dollar. I expect the US dollar to get to a key resistance or a key support ahead of the FOMC. We'll either be testing down these lows where it wicked off on Thursday, and of course a break of this pin bar will really push price down back into the 92s, or we'll be pushing higher on the US dollar and most likely reaching something like this 93.80 zone where the 50 EMA, this blue line, will hit it. Remember, ahead of big news, you usually see markets go to a support or a resistance level, and that usually becomes key. At the same time that we've got gold's decline, we have a movement up in inflation-based hedging. So we've got things like gold, and gold is now testing the previous resistance. We're testing the 200 simple moving average on the 4-hour here. We can see these green lines being tested. It breaks past this level. All of a sudden, we're opening up for gold bulls 1990 resistance into 2000. So I think this is a very critical point for gold today. And if we see a bull break here, we might even be seeing gold move up to the 1990 ahead of the FOMC meeting. Similarly, crypto gold, Bitcoin, has been acting incredibly bullishly off its zone that deserves to do so. Previous resistances have acted as support. We've talked about this one, superior buying through this 10,000 level with a huge amount of wicks and transactions showing here. Whenever you see so many wicks at this point, it shows a huge amount of buy commitment to the level. It shows accumulation, and it's a very good sign. Whether you see it in stocks or you see it in currencies or crypto, whenever there's so many daily wicks or with bodies above the psychological 10K zone, you know that's a very strong level. Now, we saw a break close last night in terms of what happened. The daily closed above the 10.6 level. So what we'd probably expect is it to find some resistance at these two EMAs, and then for it to come back down and most likely test this level. Now, the reason I like these kind of zones is they come back, they usually test the previous resistance points. That becomes support in what we call role reversal. And then at the same time, you've also got the moving averages acting as dynamic support. So if it does come down here, potential bounce up to 11.2 to hit the 200 moving average here on the 4-hour and previous supports is very possible for Bitcoin. And it's showing some good structure and good technical analysis. I think Bitcoin and cryptos are coming into their own in terms of the ability to trade them technically. So what about the S&P 500 and NASDAQ? What are we seeing going on there? Well, they remain within their ranges. Here we've got the monthly pivots on the chart. You can see the monthly S1 right in the middle here. We've got the 50 EMA and we've got the 20 EMA. And we know that the market is trapped between these two zones. We would usually expect ahead of the FOMC meeting either to be testing the resistance up here at 34.20 or to be testing this 32.20 zone. Now, if it falls through here, we've talked about in our weekly analysis, the monthly S2 becomes a very key zone. Previous structure point and of course support. Now, if we go to the weekly, you'll see why that 3200 becomes so good. Not only is it a psychological level, but notice two body closes here on the weekly. Body closes are very significant on the weekly. They show the full fight between the bulls and the bears during that week, and we have those closes. And we also have the 3200 psychological zone and the 20 moving average on the weekly. So all of these would be a very, very big dip corrective phase buying area. And if it does happen, I'm sure there'll be a lot of Wall Street at those levels. So what else are we seeing on the S&P 500? Well, I think similarly to what we're going to be seeing on the US 100 is what we're seeing here. And that is that we've got basically a double bottom formation and the 34.20 is the key area. Now, if the market breaks through and closes above there, that is very significant. Why? Well, we're getting through two EMAs. We're getting through the 20 and the 50. Just like in that Bitcoin example, if we get through a zone like that, that acts then as dynamic support. So it becomes two dynamic supports plus previous resistance acting as support as well. When we look at the NASDAQ in just a few minutes, it'll become even clearer why this is such a key level. But I particularly like what we're seeing here. And if we go down into, of course, the 1 hour, again, we will have a point where the market is finding a base. On the futures, it found a base at the 3,310. It found it again during the real market. And then, of course, this 34.24 is the key level. There's so many moving averages here acting as, of course, a point of resistance. Now we do have a bit of a sell-off coming into the end of the day. You'll notice the initial excitement, then the sell-off into the end of the day, and then the futures trade a little bit lower as well through that point. Now, if we continue to see this and we see sell-off into the end of the day as well, that usually means Wall Street's dumping. So at this point, it looks like a little flag, of course, to the buy side, but I don't think that's a strong enough symbol. I think really it's all about, can we get through this horizontal support here at the 34.26 and go long off that zone? When we look at the NASDAQ, I think the horizontal double bottom is even clearer, even better, and is certainly very, very nice. Let's go to the 4 hour now and talk about it. So very similar to the S&P 500, we get up to this 11.5, 11.6 zone. We find resistance at this point. We would have broken through the 200 simple moving average on the 4 hour, which is an important one. Would have broken through the 50 EMA, which is the blue line. And then if we get through that zone, all of a sudden we might see a retest of this level, and that will firmly cement bullish pressure up to the 12.20. Remember, with double bottoms, what you're doing is you're taking the distance of this move, and that gets the self-fulfilling prophecy, and that actually pushes into the 12.20. I think that's a very bullish sign for the markets. Obviously, we break through these lows, and then all of a sudden we're probably going this distance down. So we've got two critical levels, which is what we talked about at the start of this video for the NASDAQ. I think the NASDAQ is actually the clearest chart, and the S&P 500 futures is actually quite clear as well at this point. So whether we're testing down here at this 11,000 ahead of the FOMC, or we're testing, of course, the 11.6, the meeting, the discussion by the Fed is going to be the most important sentiment breaker for this week. And if we get lower and we get through here, it really exposes the 10.4, 10.5 zone, which again on the weekly is the 20 EMA and a very key level for the NASDAQ. So if it happens, these are the zones that I expect Wall Street to pretty much find critical. And you'll always hear me on this channel talk about critical levels and critical zones. When an area is broken in technical analysis, it means usually it will gap fill to the next area. So that basically says that between here and the next level is very likely statistically to happen. That's what you're trying to do in TA. You're trying to find statistical likelihoods that things will happen. So if you found this video enjoyable and helpful today, please remember to subscribe and hit that alert button. Just a quick reminder, we're approaching 18K thanks to the support of the community like you. And we're giving away $500 to a lucky viewer just for subscribing and potentially following us on one of the socials down below. Thank you so much. Thank you so much for coming out to the live streams, and we'll see you in another video. Good luck this week, and I hope, of course, the FOMC does what it needs to do for you, your trades, and your investments. Bye for now.